Hi there, good morning. You're watching IndianOpen right here on BloombergQuint Live. A quick glance across Asia, which is slightly more stable this morning. SGX Nifty is also showing you a positive bias. China trades under marginally. You've got Hang Seng, which is up about 0.5%. And after the break that we got in yesterday's session for Japan, that was opened up with gains of about 0.5%. For the SGX Nifty, we're at about 12,160 right now, at 30 points higher. Yesterday's trade, though primarily led by the heavyweights Reliance and HDFC Limited, it still doesn't take away from the fact that we're, if not moving up at a very pacey rate, we're consolidating, which is not bad.
Yeah, we're consolidating, which is not bad. The world markets are looking okay. We might have metals do well. And I was just glancing through the set of companies that are going to come out with results today, Devina. We likely will have performers at the broader end of the spectrum. There is IRCTC, there is InfoEdge, there is PI Industries. Most companies were expected to show steady growth, so maybe results won't disappoint today.
Yeah, and then yesterday, the SEBI go ahead and the approval for the SBI cards IPO.
That's a big thing.
It's really a big thing, and by the end of the month, you could have this big IPO open up, which could actually suck out the liquidity for.
Or get in more foreigners, maybe.
That too, but for a brief period of time. I mean,
because the applications will be high.
Yeah, so you will have that much of money getting blocked up and choked up, and whether or not that impacts the secondary market in a big way is something we'll have to wait and watch. But let's also take a look at what's been happening in the derivative space. Namni joins in for that. Namni, good morning.
Good morning to both of you. Well, the market snapped the two-day losing streak yesterday, though we closed off the day's high. So Nifty closed nearly 65 points from the day's high. It was a sign of short covering, I guess, for Nifty futures at least, because the open interest was down and you had the premium, which widened from 8 to 18 points in yesterday's trade. But it was Bank Nifty, I guess, right from the word go, where more of action was seen, at least on the future side. As you can see, the Bank Nifty futures open interest was up about 9%, and the premium also closed at about levels of 80 points. Markets were up, so you had the wicks also cooling off a bit, so that's a positive sign for the bulls. It closed below the mark of 14 at levels of 13.8, and it was a day when you had more of put writing back into the system. So Nifty PCR closed at levels of 1.38 versus 1.32. What's the range you can watch out then for tomorrow's expiry? 12,200 call, that's here, and 12,000 put. Now these two strikes are the one which is sitting with maximum open interest. Near-term range definitely remains between 12,000 to 12,200, but yesterday, as I mentioned, PCR went up due to higher put writing. 12,100 put saw aggressive writing in trade, while out of the money call strike like 12,300 also added some open interest. I think also important to note, we crossed the mark of 12,100. We closed at 20 DMA, and the call riders of that strike ran for cover. So that's a positive sign. Let's see if 12,100 can be a good support, at least going ahead for the markets. Moving on to individual stock futures, then a lot of stocks were moving around. Balkrishna Industries is at 52-week high. Fresh long positions were seen, and Sun TV, by the way, crossed its 200-day moving average in yesterday's session. Long positions seen here as well. Short positions were seen for Nalco, which posted a loss for the December quarter, and you also had GAIL, which was a top gainer on Nifty. Short covering bounce was seen on that counter. FI data has been quite mixed in the recent past, but some positive cues, at least on the index futures side. They unwound some long positions, and there was some data added on the long side, while index options data remains divided. Yesterday, there was some hedging seen in the form of put long, where they added nearly 7,000 contracts. With that, it's back to you guys.
Right, Namni, thanks very much for that. Pankaj Pandey, Head of Research at ICICI Securities, is joining us right now on the show. Pankaj, good morning to you. Let's take it off with this big IPO that would hit the market by the end of the month. SBI cards getting the go-ahead from the SEBI. What's your take on it in terms of what it does to the short-term liquidity in the system as well?
Hi, good morning. I think on this SBI card, last 6 months, I think the profit is somewhere about 750 odd crores, and with the way they've grown in the past, probably our sense is that for this year, overall, the profit could be nearly about 1,500 odd crores. And on top of it, if you look at, say, 15, 20 or 25% kind of a growth, actually they've been growing far better than that. So from that perspective, commanding a valuation of 50 to 60,000 should not be a big ask. So from that perspective, I think we would expect a decent response or good response to the IPO. And that should help SBI as well. From that perspective, I think overall, if you look at this, SBI card is a good proxy for overall discretionary consumption, and from So from overall oil perspective, I think we should see a good demand, and our sense is that with the kind of market cap it would command, probably for it to sort of make it to indices will not be a challenge. So overall, we are expecting a good response.
All right. You said that this would probably also do well for an SBI. So far, I mean, post the results, do you feel that from the PSU banking space, if there's one bank that you need to have in the portfolio, it should be SBI?
Absolutely. I think within PSU banks, I think SBI is the only bank which is sort of faring better in all metrics, whether you look at gross NPA, net NPAs. So from all the perspective, and plus, I think in case if we get a yield decline, given the fact that the government has not really sort of diverted too much on the fiscal prudence path. So our sense is that SBI is one of the best, and typically it is trading at 1.5 times adjusted book basis compared to most of the PSU banks, including something like Bob is trading at about 0.8 times. So I think this is the only PSU pick what one can look at in the current market conditions.
Pankaj, let's talk about earnings thus far and the two PSUs, if you have views there. One that came out with results yesterday and reacted, GAIL, up about 6%. Is the risk reward in an investor's favor, or would you not touch it? And then Coal India, which came out with numbers, no dividend as yet, and the numbers didn't have anything special, but the stock has corrected about 6%. What do you do with these two names?
So I think on the GAIL, see, the issue always is that petrochemical as a segment is sort of volatile for them. While in the last quarter, the gas trading and transmission business did extremely well. But our sense is that the volatility in their EBIT margins is quite high given the kind of way things sort of fluctuate. So we sort of look at, or we are more positive on city gas distribution companies. At least there we have not seen that kind of a margin volatility. So even if the numbers have been decent, we will not be sort of chasing GAIL. I think on Coal India, the challenge is that while the volumes are still sort of degrown in the 9 months, expectation is that the volumes would normalize. But the issue is that if you look at the larger value chain, largely, I think our sense is that whatever incremental power demand is going to come by, largely it will be met through renewable energy. So which is why structurally, when one cannot sort of build a very strong case for a good volume growth and this company doing well. So from that perspective, it's not a portfolio stock according to us, despite the fact that it is trading cheaper. But then again, I think it is very difficult to build a long case for a company like Coal India.
Okay. So far, Pankaj, your reading on third quarter earnings that have come out, and what is the projection? Because do you feel that, keeping in mind the end of year growth targets, quarter 4 becomes a pressure point for most?
Absolutely. I think so. You have only a few bright spots overall. And largely most of the earnings have been sort of in line. I think auto something we are still not sort of looking at very positively. So I think earnings overall have been sort of decent with a brighter spot in certain pockets. So overall, I think Q4 earnings will become the key, because even for consumption oriented segments, I think the volume growth was slightly muted. So from that perspective, you really do not have much to sort of look at. I think Q4 onwards, if the ordering and tendering, which is what we are expecting, especially on the infra side pickup, then I think you will see more broad basing of markets. And our sense is that probably that could happen because especially in some of the key segments like road, I think the government has done a fair job of land acquisition, and our sense is that going forward, companies operating in this segment should benefit from this. So, so Q3 has not been sort of that encouraging overall up till now, but we are hoping that Q4 would be better than Q3.
Well, let's wait and watch if indeed that happens. What sectors within that really lead to this rally? Pankaj, just one follow-up. We were just doing a piece and we're just looking at the kind of gains that some of the MNCs which are posting good numbers are doing. GMM Pfaudler, very expensive stock, but gave good commentary and gave good expectations. The stock is now about 65% in the last 1 month. Honeywell Automation, another stock which hit record highs yesterday, and the last 1 month, 1.5 month performance has been exceptional. By any chance, do you study these two names or any other MNC name which you particularly like?
So we don't have a coverage on these two names, but GMM Pfaudler we had sort of explored. I think they are in an interesting space. So our sense is that the glass equipment liner business should do well going forward, given the fact that the kind of scrutiny a lot of these pharma names are facing. So for them, it's a good opportunity, but I think a lot of it is there in the price. Multiples are not cheap. But I think what we are liking in MNC is again the MNC pharma names, especially something like Abbott. I think what we have seen is that in the last 9 months, the volume growth is in good double digits. Their top 10 brands are contributing nearly 60% odd. There has been a good margin expansion. So in the last few years, from 11-12% kind of a margin, the margin profile has improved to nearly 20% odd. Balance sheet wise, we don't see much of a challenge given the fact it's very lean. So it's trading about 38 times. So I think something of that sort we have been liking for quite some time. It's been a performer for past 2-3 years, and our sense is that with the kind of growth numbers the company has been delivering, this will keep doing well. We have a target price of about 16,880.
All right. Pankaj, lots more to talk to you about, but we just have to take a slight detour, go across to our research team who are joining us right now to give you a run through of all the results that came out post-market hours and the possibility of a reaction on those stocks today. And then the big one from the Nifty, the Hindalco, and what is expected when the results come out. Darshan, let's start off with you first on some results.
Yeah, so some of the numbers that came out, one of them obviously will react to Hindalco because the subsidiary Novelis came out with pretty much steady set of numbers. Now, if you're looking at it, the sales was much lower, and that was on account of lower average LME aluminum prices as well as local market premium. The EBITDA per ton after 2 record quarters has managed to stabilize this time around. The management remains optimistic both on the auto segment as well as the can segment. The other one was Ircon. While revenues were down 3%, profit was up 50%, and EBITDA was up 13%. And the EBITDA growth was mainly on account of lower raw material cost as well as other expenses. And tax reversal and higher other income aided the profits this time. IDBI Bank, while the NII was up 13%, the net loss ballooned to almost 5,700 crores. But this was because of a one-time tax impact that came in of 6,500 crores. Asset quality is stable for the bank. Aster DM revenues up 8%, profit up 40%, and EBITDA is up 46%. The hospital segment was the one that drew revenues up 16%. The other segments were flat, and lower expenses and Ind AS actually aided the margins. And finally, Hexaware, not a great set of numbers. Dollar revenue up 2%, overall revenue up 3%. Profit was down 8%, and margin managed to contract by 400 basis points. Higher furloughs and write-downs from a top client in the BFS segment impacted the numbers. The revenue guidance is at 15 to 17% for calendar year 2020, and the EBITDA guidance is 15 to 16%.
All right. Yash, some more numbers?
Yeah, I'll start first with Novartis, and they came out with a weak set of numbers. Their revenues were down 13%, net profit was down also 40%, while EBITDA was down by almost 33%, while margins did get impacted because of the higher employee costs. Astral Polytechnic came out with a steady set of numbers. Their revenues were up 5%, led by a 6% volume growth in their main piping business, while adhesive business for yet another quarter lagged behind. Their net profit was up 30%, while EBITDA was higher by 18%, which was largely aided by the benefit of anti-dumping duty on CPVC resin imports from China as well as Korea. HEG came out with extremely disappointing set of numbers. Their revenues were down 79%. EBITDA fell by almost 99%, while they reported a net loss in the quarter of 1.2 crores versus a net profit of 865 crores in the same quarter last year. BHEL, again disappointing set of numbers. Revenues were down 22%. This was mainly on account of weakness in both their power as well as the industry segment business. Net profit was also down 17%, while EBITDA was higher, aided by lower other expenses. And lastly, Cochin Shipyard came out with good set of numbers. Revenues were up 25%, mainly on the back of a 35% growth in their shipbuilding segment. The net profit was up 32%, and EBITDA was higher by 25.5%.
All right, so those were some results that came up post-market hours. Now, we know what Novelis did. We were looking out for what Hindalco is likely to do on the back of lower alumina prices.
So domestic business, we aren't expecting good set of numbers coming in. Just look at the standalone business, which is excluding Utkal. We're expecting a 14% downtick just on the top line growth. EBITDA, however, that number is expected to be higher by as much as 6% on account of lower alumina cost. Margins are expected to expand, and profitability is expected to go down, however, by 22% on account of depreciation and finance cost adjustments. Sales, if you look at the picture out there, aluminium division is expected to perform just flattish, and copper sales, that is expected to go down. They're expected to go down by as much as 14%. Talk about standalone plus Utkal division, top line operational performance, both of them, you see the numbers declining in on account of that lower prices coming in for Utkal division, which in turn will have a bearing on the complete picture of the domestic operations as a whole. What we'd like to watch out for also will be the copper division performance. Besides the volumes being lower, the treatment charges and the refining charges, they are also expected to weigh down on the EBITDA performance for copper division as a whole. We'd like to watch out, apart from that, management guidance on Alvis, which to an extent seems to be positive given the kind of numbers that we've seen from Novelis. Production cost of aluminium segment and the outlook coming in on aluminium as well as alumina for that matter.
All right, guys, thanks very much for that. So we'll keep an eye out on all of those factors just highlighted. Pankaj, a quick take on some of these metal names and what they're likely to do. We've started to see prices, global metal prices also starting to pick up now. Steel rebar prices have gone up in yesterday's session, but nonetheless, the cycle for metals is turning. Do you feel it's a good time to be in them?
Actually, on the metal, we are slightly sort of circumspect, largely because our sense is that in China, overall discretionary spending will sort of take a hit, and probably that would lead to a decent amount of inventory at the producer level. And so, to clear that inventory, our sense is that the prices are likely to remain soft. Whether it is the finished product prices or whether it is the conversion spreads, what we look for, whether it is for oil and gas or whether it is we are looking for metals. So from that perspective, the backdrop is pretty sort of weak. Now, within domestically, I think largely we would expect Q4 to be slightly better, but overall we have seen weaker set of numbers. Even for Hindalco, we are expecting about top line to sort of decline by 15%. Volume largely is muted, even though Novelis has sort of done well. But I think, according to us, any kind of a liquidity measure which China is sort of unwilling will have, at best, might give a trading buy. But I think nothing structural to sort of chase these stocks. So, except for trading buys, we don't think that the metal as a pack we would be chasing.
Okay. Pankaj, stay on. So much more to talk about, but let's get in our experts on the derivatives and the technical side to try and talk about what to do in a scenario like this. Gaurav Bissa, AVP at LKP Securities, joins us, as does Chandan Taparia, Associate Vice President at Motilal Oswal Securities. Gentlemen, both of you, good morning. Thanks for joining in. Gaurav, interesting times because we are almost playing it by the day, I reckon. Up one day, down the next. What kind of bets would you advocate in the session today? On the index, that is.
Good morning. This is the kind of move that one would generally expect when there's a range-bound move that is expected in Nifty. See, we have a very strong resistance at levels of 12,400, and that's a given. Everybody is talking about this level as a sacrosanct. On the other hand, 11,800 is what people are expecting as support. We had a bounce from those levels as well. So it is bound to have such kind of moves, and in a scenario where there are events also lined up, there's a possibility that we may be having a zigzag motion, not just a one way up or one way down. On the other hand, we are not seeing too much of aggressive positions build upon. If you look at the option chain, 12,000 still commands the highest concentration or a very good comfortable writing. On the other hand, 12,200 is on the call side is expecting a good amount of writing. So there's a range is now narrowing down, right? So what we saw, range shift from 11,500 put option having the highest OI, then to 11,800, then 12,000. That range shift is not seen right now, and that is the reason why we are seeing a staggered move coming in the indices. As far as trading is concerned, one will have to be a little bit careful, play with smaller stop loss, smaller targets. In my opinion, any dip towards 12,080 on the spot side can be bought. Keep a stop loss of 50, 60 points on the upside, 12,180, 12,200, the resistance area that can be touched upon. Bank Nifty, there's a good support at area of 31,200. Use as a buying opportunity as 70 points from the dip from the current prices. Keep a stop loss of 31,100. The next set of targets would be 31,500. So, in my opinion, play with smaller stop loss, smaller targets till the time either 12,200 is not broken. If that is broken, then we will look about 12,050, 12,400. Till that does not happen, it is going to be a range bound move. And when Nifty trades in a range, you play for a range.
Okay, yeah, play for a range when the Nifty is in a range, then don't try and unnecessarily try and do something otherwise. Chandan, that may be sound advice, but you may differ out here. What is your thought on how to approach the index trading currently?
Yes, good morning. We have seen Nifty moving in a trading range between 12,000 to 12,172 in last 4 trading sessions. But good part is the declines are being bought, whatever be the reason. We are holding the highest put OI at 12,000. That is also respecting the same, but at the same time, we have multiple hurdle near to 12,222 zone. So bias could remain positive, but buy on decline could be a strategy because we are in a trading band. So as of now, till we hold 12,050 zone, we'll suggest to be with long position and expecting it to head towards the previous day high of 12,172 and a move towards 12,222 kind of level. And in fact, we have done the short strangle and the short straddle with the view that market is likely to be in a range and the premium has to decay, because market is anyhow likely to move between 12,000 to 12,222 kind of level. Similarly, talking about the Bank Nifty here, we are moving in between 30,900 to 31,500 zone. And yesterday it made the high near to 31,500 and witnessed some sort of decline. But bias is turning positive because it reclaimed its 50-day exponential moving average. So for Bank Nifty, till it holds 31,000, we are expecting it to move towards 31,750 kind of level. So in the broader trading range, we are moving in a range, but the way it has recovered from the lower band of the trading range, we will go with buy on decline and expecting market to go toward the upper band of the trading range in next couple of trading sessions.
Okay, so that's the index call, and therefore, Gaurav, my question to you would be that if you are playing for the range and therefore that may not yield too much in terms of gains necessarily on the index, how do you approach stocks then? What are the stock recommendations that you are making?
See, if you talk about range, there will always be stocks that will outperform, they will underperform, and they will be in line with the Nifty index. So I would recommend the stocks that are either showing good breakouts, where you can see a strong momentum sort of coming in, or some that are seeing reversal. Today I have come out with breakout stocks. One would be on Titan, where after a prolonged range-bound move between 1150, 1240, the stock is now comfortably trading above that level, forming a flag on daily charts. Not given a breakout yet, but it's trying to retest the levels of 1240, 1250. Very strong support zone. One can use a stop loss of 1250 on the upside. 1310 is the immediate target. If that crosses, it can even go towards 1350 in the current series. Second would be buy on Balkish Industries. Consistent long pushes getting built. Witnesses a small retracement, then sees again a breakout. Again on the verge of a good breakout on daily charts. One can keep a stop loss of 1115 on the upside. Targets of 1170 is what I would be looking. So buy the stocks that are in the momentum. When Nifty retraces, these stocks also retrace, and then once Nifty picks up the trend, these are the ones who will pick the trend faster. So I think these two names can be very lucrative and should be on the radar.
Chandan, what about you? Your ideas?
Yeah, even I'll continue with Balkrishna Industry. This stock is given a consolidation breakout. We have seen a narrow range formation and then breakout above the same. The stock has given a highest daily close. We are adding built up of long positions with rise in the volumes, and this stock is holding even after the market profit booking decline or the consolidative move. So some sort of outperformance nature is clearly visible in the name. So recommending to buy on Balkrishna Industry with a stop loss of 1110 and expecting it to move to us 1190 to 1200 kind of levels. Second trade, after a long time now, we are selecting to be with State Bank of India. This stock is holding the gains from last couple of trading session, and in fact on the last trading session, it started to hold at the upper band of the trading range of last 3-4 trading sessions. So, and again, I think the SBI IPO is also adding some sort of positive sentiment in the counter. And the way stock has taken supported the lower band of the trading range, it should go to the upper band of the trading range. So recommending to buy on SBI with a stop loss of 316 and expecting it to move towards 340 kind of levels.
Well, let's wait and watch if that happens or no. The State Bank of India would be the other one that you need to monitor. I think Pankaj Pandey also was talking about that. Let's wait and watch. But we just continue with the chart conversation, and it's time to get in Yash Upadhyay on our special segment, Bloomberg Edge. He'll talk about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, good morning. What's the stock on our radar today?
Good morning, Neeraj. So we're looking at Quest Corp, and after a sharp fall in yesterday's day of trade, the ADX indicator suggests that we could see further weakness in the counter. But like we always do, let's first try and understand what the ADX indicator is and how do you interpret it. The ADX indicator basically shows you the directional movement of the security as well as the underlying strength within the trend. How do you interpret it? You go long or you go short anytime there is a crossover between the plus DMI and the minus DMI line. Now coming back to the price chart of Quest Corp, and on the daily time frame, what we've seen is that the minus DMI line, which is the one in red color, that has crossed over the plus DMI line, which is a negative indication. We've seen the stock has been falling for the last 3 consecutive trading sessions. Although yesterday we saw a near 4% fall in the counter, the volumes weren't the highest, but we have been seeing some amount of weakness and a formation of a rounding top in the counter. Additionally, if you see the mark of 600 was somewhere there was a point where there was a strong support. We've seen multiple times the stock on an intraday basis came down to that level, but it respected that mark and it closed above it. But the last 3 trading sessions have been extremely weak, and we've seen the stock come off. The ADX indicator suggests that this weakness will continue because the white line, which is the ADX line, that too is quoting at a very high mark of almost 40. Typically a reading of over 25 indicates that there is a strength within the trend. So both these indicators combined suggest that we could see continued weakness in Quest Corp.
And how well has this worked in the past?
There have been 3 out of the last 6 times that the indicator has given a negative signal. On an average, the closing returns have been closer to around 5.8 to 6%.
Okay, on the downside there, Quest Corp, some weakness that's building up. Yash, thanks very much for that. Let's also talk about this big mover. There was Gale in yesterday's session. Quick word, Chandan, on the stock, 6% higher at 130. Would you be a buyer here?
Yep, in fact, some sort of buying interest was seen, and I think the way the price formation is visible, the stock has potential to head towards 137, 138 kind of levels.
Okay. And, moving to the broader market space, a few big movers as well came from there too. You had stocks like Relaxo. Post results, remember, Relaxo was absolutely flat, not much of a move on that one. But yesterday's session saw some bit of an activity. The stock moved up. By the end of it, closed up around 4% higher, but I think intraday went up to about 6% odd. Parag Milk Foods yesterday was down 16%, a big knock that the stock saw. And there was some profit taking on Avenue Supermarts. Gaurav Pissa, Parag Milk Foods, 100 rupees in the stock after the selling. Do you feel there could be a further downside here?
Well, if you look at the daily charts, then yes, it has given a breakdown and we can see some more selling. There has been a good amount of volume participation in this fall. So there is a chance that even if there is a small uptick in the prices, it can be further used for seeing further more selling. So in my opinion, this is a stock that one should be avoiding. It's broken crucial support levels. If you look at daily charts, it's given a breakdown on a bearish flag pattern, which is a continuation pattern. In this case, the pattern continuation would mean that the trend is lower, so it can continue to be on the downside. In my opinion, it's in a very dangerous territory, and one should be out of this stock for the timing. It can even slip towards the level of 197, 90 to 95.
Pankaj, do you track Parag Milk Foods?
No, we don't have a coverage on Parag Milk Foods.
Okay. The other one that's doing extremely well has been Wockhardt. In the last 1 month, the stock's up 60%. Pankaj, what's driving the interest here for Wockhardt?
So we don't cover the stock, but the reason why we sort of not chased the stock was that probably one of the key drugs was a banned substance. So somewhere down the line we were not very comfortable. So not that we actively track the stock, and which is why we have not been chasing. But overall, I think within pharma, the commentary is still sort of quite weak, especially on the US side. So the only domestic oriented players have been sort of doing well, and plus hospitals. So I think that is the only space we've been chasing.
Okay. Pankaj, by any chance, do you guys cover IRCTC? The numbers are slated to come out today. What do you think will excite the stock?
So don't cover the IRCTC stock, so really do not have a view, but I think railway is turning out to be an interesting opportunity with the kind of overall capex being planned and with the kind of losses what railway makes on the passenger segment side. I think a lot of moves in terms of towards privatization. I think this company should be a beneficiary. I don't have the numbers to sort of give a target price for this.
You know, it'll be interesting to see. I mean, one, what IRCTC does, they hopefully they'll talk as well, Devina. But the interesting bit is
13th there is their conference call.
Yeah, the interesting bit would be the guidance that they give around what they could do over the course of the next few months, simply because now they have operational trains as well. The last couple of quarters, the revenue growth not necessarily has been very strong. If they manage to give a guidance of revenue growth looking okay, we know that the operating leverage is there on the business. So if the revenue growth guidance turns out to be decent, then you might well have the stock, which has just taken a bit of a pause after that mammoth rally, look excited again. So the numbers delivery and more importantly the con call tomorrow, what they say would be very, very important.
Well, the street is already factoring in for FY21 an additional revenue of 700 crores to come in from the convenience fee. That will probably be something that may be baked into the price, I'm not sure. But obviously the management reiteration of that makes a difference. And it's also a dividend yield play, so wait and watch as to what they do.
Yeah, let's wait and watch. Gaurav, very quickly, support levels for this one, because it went up and then just cooling off a little bit.
Which stock you're talking about?
IRCTC, Gaurav.
I mean, it's on a tear. We have seen some amount of profit booking, but overall, I would not play for any support in this price, because if you see, there has been a vertical rise, a very strong rise. So it's only about retracement. The previous candle on daily charts also, it would be around 1280. Before that, there's nothing to talk about because it has been forming very fat candles. So if somebody wants to talk about supports, it will have to look at the lower part of the previous candle. So the lower part of the previous candle is 1280. So that can be the immediate support area.
Okay. Let's watch the life high for IRCTC is about 1563. We'll see what the stock does today, post numbers. 23 seconds left to go for market or pre-open. SGX Nifty holding for 35 points higher. That's 12,163. Rest of Asia too doing okay. I think China breaks into the green too. So we've got full green on the screen. It's a full house there. Coming down to individual stocks, important to watch what Coal India does post the reportage and no dividend. So that's something that could probably disappoint. And SBI post the approval of the SBI IPO, SBI Cards IPO. So let's take a look at all of those stocks individually. Reliance Industries, the big mover, outperformer of yesterday, supported the index. SBI now up 1.5%. That's 330 for the stock. Remember, Janata Party places targets at about 340. I think now it's about 2.5–3% higher for SBI. Coming down to some of the losers, IndianOpen Banks down 6%. I think there was Moody's a note on IndianOpen Bank yesterday. Not looking all that good. The stock's down about 5.5%. Coal India posted its numbers down about 2.5%. So that's not clearly kept the street abuzz. Maybe the street was expecting that dividend announcement. It didn't come about. Power Grid, Asian Paints, Nestle, HUL are all down in trade this morning. I think Reliance Industries also slips into the red. What's doing well and it's outperforming is GAIL. Yesterday 6%, pre-open suggesting 3.5%. Tata Motors is doing well, about 2.7% higher. HDFC Limited, Cipla, Ultratech, L&T at 1298. Z is at 233, HCL Tech at 614. So not bad going for some of these names. For the currency, a marginal strength that we're seeing in the rupee versus the dollar right now, 71.24 to the dollar is what we got.
I want to pull up BHEL and see if that is reacting adversely to what seemed to be a very adverse set of numbers, 1.5% lower. Maybe the pain is already in the price, but brokers have said that the continuation of this entity might be an issue unless they make some radical changes. Let's wait and watch if those happen. You know, Shilpa Medicare, the last 3 days, there was a positive announcement. I'm forgetting what the nature of the announcement was. And then there were results. But I think the stock on the last 3 days has won a bit of a role and looks like it'll start off well today. So do watch out for this one. Coal India, by the way, very volatile. So let's give these rates a chance to stabilize before we talk more. But now it's showing an uptick of 5.5%. So let's wait and watch what happens here. What else? There were Astral Poly came out with a very good set of numbers. We should talk to Pankaj Pandey about that. But the numbers, the EBITDA numbers looked very strong. And typically we've seen this earnings season that companies, even if they don't have the top line growth, if the EBITDA numbers have looked strong, then the markets have tended to reward that. Maybe the market rewards Astral Poly. So let's wait and watch if that happens. And GMM Pfaudler as well as Honeywell Automation, two stocks which have done extremely well for themselves in the last few days, were trading at highs yesterday. Let's see how they are starting today. Let's wait and watch out. By the way, HEG is the other one, the last one that I want to point out. Abysmal numbers. Maybe the stock is reacting. 20% lower for HEG for now. Let's see if this changes, but the numbers are so poor that I wouldn't be surprised with any rate out here. It may be 2-3% because the stock has corrected, or it could well be 20% because the numbers are just looking so poor. EBITDA is down 99.6%. Imagine the destruction on the operational front for HEG. No wonder they have clocked a loss versus a profit in the last year to 865. Now, before we get to brokerages, I think it's important to speak about HEG and Pankaj Pandey. I hope you have this within your coverage, these graphite electrodes businesses. The numbers look so poor.
You're right, Neeraj. I think we were expecting poor set of numbers, but largely because of the fact that these players have been sitting on high cost of inventory. So, and have not been able to sort of pass it on. So I think a detailed look still needs to be seen, but the numbers apparently are better or worse than what we have anticipated.
Somebody has...
Probably going forward with high cost inventory out, things...
No, Pankaj, that's the question. Okay, sorry, please make your point, but also tell me that if somebody has the stock and can get out of the stock today, if it permits, should one get out of the stock or should one stay on because the stock has already corrected quite a bit?
So the stock has already corrected quite a bit, and I think within metal and mining space, if you look at, I think both graphite and HEG definitely have a far more better balance sheet. So it's largely a P&L issue what we are facing, and I think the high cost of inventory is out of the system. I don't think this is the time to sort of exit these stocks.
Okay. Stay on with us, Pankaj. Shefali Malik is also joining us right now with the big brokerage calls of the day. Shefali, over to you.
Well, the big brokerage call for today is that by Haitong. They've initiated coverage on Federal Bank with a buy rating and a target price of 120 rupees per share. And they're saying that this one, it started off as a regional bank, but over the last couple of years, it has transitioned itself into the next gen private bank and expanding. And they're doing that by expanding outside of Kerala. So they have a retail deposit share, which is one of the best in the industry. And the franchise in Kerala is very strong, especially the NRE deposits that they have. They remain a market leader in that, and they've been successfully expanding outside Kerala. So going forward, margin and efficiency of improvement is on cards for the bank, and they expect normalization of credit cost going forward, which has been high in last few quarters because of the wholesale book, but that is expected to normalize, and they expect return on assets of 1% and 1.1% and ROE of 13% and 14% in FY21 and 22 respectively. So strong commentary coming in as far as Federal Bank is concerned.
All right. Thanks a lot for that, Shefali. 120 on Federal Bank. Remember, last quarter or a month before that, the stock was trading somewhere closer to 100, 110. From there, it collapsed all the way down to about sub 80. And then the pickup has come back in. It's trading somewhere closer to 91. Let's talk about some of the other bigger trends. Real estate and that particular pocket that we've not spoken about. Chandan Taparia, anything that you are seeing within the real estate pocket, likes of Prestige, which were in favor in the first week of Jan? You saw a lot of interest on almost a daily basis. The stock kept moving up. 381, Godrej Properties, Oberoi Realty, and DLF.
See, comparatively, I look at the Oberoi Realty and the Godrej Property. Godrej Property yesterday witnessed some sort of consolidative move. But comparatively, if we look at the price section, this stock is holding the gains, supports are intact. It closed near to 1150, and I think the 1130 zone is the multiple support as of now. And because of that support, some sort of bounce could be seen, which may take it to 1200, 1210 kind of level. So comparatively, I'll prefer Godrej Property and then Oberoi Realty.
Okay, the stock's anyways done well in the last 3 months, up 21%. Avenue Supermarts. Pankaj, you want to comment on this one? 2400 for Avenue Supermarts post QIP. Do you feel that it's still okay to ignore the high valuations and be a participant in the stock?
So again, see, we have not been participating in the stock largely because I think from a valuation perspective, the valuation is quite steep. Otherwise, from operational parameters, it's a very good company. But then again, I think the challenge always remains with valuation, and so which is why we have not been chasing. And I think we'll again look for correction if it happens in stock because largely. I think we would expect that going forward, at least on the promoter side, probably you might see some more stake sale happening because the stake is yet not 75%. So from that perspective, we would look for an opportunity to enter. But I think this stock has been sort of giving stellar moves, so we have not been participating. It is a kind of a missed opportunity for us.
Okay, Pankaj, do you have a look at Kalpataru Power? Yesterday, the stock came off, and when optically looked at the numbers, they didn't seem as bad. 422, about 1.5% higher today. Do you have coverage here, and what's the house view?
So we like both KC and Kalpataru. Both are trading at 11-12 times. Order book has been sort of decent. So from that perspective, nothing sort of negative per se. I think the company is looking to sort of deleverage going forward because they've been selling some of the assets or monetizing some of the assets. So from that perspective, we don't think there's anything sort of negative to sort of hold the stock down. So I think these are the few names on the infrastructure side which we are sort of positive on besides L&T, KC, Kalpataru, and then you have road players like PNC Infra and KNR Construction.
We'll let you go on that note, Pankaj. Thank you very much for joining us this morning. So that's what you've got. We've got about 5 minutes left to go for markets to kick-start, and I think the last pre-open tick suggesting a positive open for the index by 1/3%, so 12,151 is what we've got. But let's tell you all that you need to know to stay ahead in trade just a few minutes before open. Among key earnings today, Hindalco, IRCTC, ABB India and Ashok Leyland will report numbers today.
Coal India meets estimates in the third quarter. Margins were impacted by low e-auction realizations and higher expenses.
Amongst earnings reported after market hours, Aircon International, Aster DM, Cochin Shipyard and Astro Poly reported strong numbers.
On the other hand, Hexaware, BHEL, HEG and Novartis reported weak numbers. HEG likely to start off 11% lower.
JSPL is in focus after the Wollongong coal hearing takes place today to restructure debt of its Australian operations.
And Novartis remains optimistic on the growth outlook for can shipments as well as autos. The numbers slightly weak and the stock likely to start off 1.5% lower. So you keep all of these stocks at the back of your mind. But get in an important market voice. Vetri Subramaniam, Group President and Head of Equity at UTI AMC, joins us on the show. Vetri, so good having you. Thanks much for taking the time.
Thank you.
Yeah, after long and for the first time in our studio. So great having you.
Nice to be here in your studio.
Pleasure is ours. What's the sense, Vetri? I mean, the flows are saying one thing, but the globe, for now, maybe because of flows or otherwise, is shrugging off all worries regarding coronavirus. How are you mapping the globe and thereby what could happen to the Indian equities in the near term?
Sure. I think what's happening on the globe, particularly as you said, relating to the coronavirus issue, is that really we have no way of distilling down what that means in terms of actual risks to companies. And I think given that China is, almost an element of every global supply chain, there are bound to be disruptions. So I think clearly there is going to be a negative impact on growth. There is going to be disruption to supply chains, maybe prices moving in pretty volatile fashion based on which part of the market you're looking at. But I think one has to also look beyond, which is at this point of time, I think the market is treating this as a very temporary bump in the road. And remember that supply-based disruptions and reduction in inventory automatically course correct once things normalize. So I think at this point of time the markets seem to be factoring in that this is really just a minor bump in the road, maybe a one-quarter affair. If this starts to either escalate or the disruption lasts longer than maybe a quarter, I think is when the markets will start to reprice. The other challenge for the market with this coronavirus issue really is that you can even deal with the trade war by asking your central bank to be very lenient in the way it looks at rates. But liquidity doesn't help when the whole supply side is getting disrupted because of something like the coronavirus. So I don't think we have an easy way to address some of the concerns in the market. But right now, at least the equity market has decided to look beyond. But if you look at the commodity markets and bond markets, they are a lot more concerned about what's happening.
Yeah. Do you think when we are in a position where some of our manufacturing units can probably fill the shoes of some of these supply gaps, or that's too marginal, a capacity to even compete with the gaps?
No, I think that's too simplistic a thought process. The fact remains that if you look across a wide range of Indian companies, they are completely integrated with that same global supply chain that passes through China. This is, in all sorts of manufacturing industries, the automobile, pharmaceuticals, electronics. So, it's not a question of will you benefit. There is somebody else who's going to lose out simply because the supply chain has been disrupted. So I think that's too simplistic a thought process in terms of thinking about coronavirus as benefiting us. Believe me, you will find out over the next quarter how many companies come out and tell you that they had challenges because their own supply side got disrupted.
Yeah, I think it was very interesting to see those con calls and the announcements by some of the companies. Almost every company saying, agar ye theek ho gaya by end of quarter 4, then we are not impacted. Otherwise, we do not know. So everybody's really playing their cards very close to the chest.
That's actually a global thought process as well, because when you're talking about just one quarter's impact versus this getting extended further. I mean, we had Fitch ratings saying that for China, quarterly GDP is expected to come in at 3% because of coronavirus. So that's definitely having its own detrimental impact across.
And we'll continue this conversation with Vetri in just moments from now. But Vetri, stay on. We're just a minute away from market open. So good time to get in final thoughts from our experts and the top calls as well. Chandan, if I can start with you, your top call for the day today.
Yeah, then I'll go with State Bank of India. This stock has given a decent close, recent highest daily close by holding above its 50-day exponential moving average. It is also surpassing its falling supply trend line on the weekly scale, and positive setup, and the data put writing indicates up move, so recommending to buy with stop loss of 316 for an up move towards 340, 342 levels.
All right, what about you, Gaurav?
I would go with Balkrishna Industries, the kind of breakouts it is seeing, the positions being built. I would recommend stop loss of 1115, 1118. On the upside, 1170 is what I would be looking at.
Okay, gentlemen, Chandan Daparia, Gaurav Bisla, thank you so much for joining in today and giving us your thoughts. Really appreciate your time. We're about 22 seconds away from the market's kick-starting trade. We'll have a start in the green, as the pre-open rates have suggested, and banks could likely do better at open at least. The question is, can we stay on? And the other question is whether mid-caps and small caps will underperform yet again, because yesterday was a day wherein they underperformed the large caps by a margin. Let's see if that underperformance gets recovered in the session today. But here's how we're starting off the trade this Wednesday morning. In the green, about 1/3% for the Nifty 50, about 39 odd points, Sensex about 139 odd points, and the Nifty Bank about 100 points. So about 1/3% or thereabouts for all the three key benchmark indices, and building on a little bit. The mid cap and the small cap indices will also come up on your screen. The small caps, muted start. Mid caps too, not as great, just about 38 odd points, but at least the breadth seems to be positive. Let's get the Nifty 50 heat map up on the screen and show you what's moving and what's not. Well, a lot of green, almost akin to how we started off yesterday with very little red on the screen. Let's talk about the winners first. Tata Steel. Remember, LME commodity prices surged, and maybe we'll have a day's gains, or at least the morning's gain for some of the metal names. So Tata Steel, Vedanta, Coal India after the numbers, Hindalco, all of them gaining. Hindalco also has to contend with the Novelis numbers, by the way. Tata Motors starts off in the green. State Bank of India, the SBI cards IPO approved yesterday. Maybe that is giving a bit of flavor, but about 1.5% higher. ICICI Bank about 1% in the green. And the big boy Reliance Industries about 0.5% up in trade. We also have the likes of Axis and HDFC Bank doing okay. So banks are not in a bad spot, about 0.5% for the Nifty Bank as well. What is in a tough spot though, and not surprising, one is IndianOpen Bank on the release by Moody's yesterday, I reckon down 3%. Yes Bank about 1.5%, but that's too volatile. But aside of that, not too many losers. What about a couple of pockets that I want to highlight before I hand it over to Devina for what's happening across the broader end of the spectrum. One, companies which are trading at record highs yesterday, and particularly in the MNC space, two names, Honeywell Automation as well as GMM Pfaudler. And GMM Pfaudler, after gaining about 68% in the last 1 month, starts off another 4% higher. This stock is seeing almost no pull of gravity, extremely strong showing in the last 1 month post numbers. What about companies that came out with numbers, by the way? Novartis came out with numbers, as did BHEL, and both of these missed the mark and therefore starting off on a slightly weak footing. Devina, what are you spotting?
Numbers, first off, Astropoly. That stock's doing well, I think about 3% higher on the back of results. Then you had Aster DM Healthcare, that too reported its numbers. Revenues were up about 8% while the profits grew about 38%. The stock's up 7.5% this morning. Hexaware is the other one. Dollar revenues were up about 1.8%. The stock, we'll get the management to talk to us in just a bit, but the stock's opened lower by about 4%. And Ircon International is the other one. That too reported its numbers. Post market hours, and stocks up about 4%. Moving on, not on numbers, but just general momentum, keeping Shilpa Medicare up and active. The last 3 days in a row, the stock has gained, and it's up 48% in the last 7 days. So that's one stock to keep in mind. Lakshmi Vilas Bank too, in the last 7 days is up 43%. That stock's up 4.8% today. Then you've got the likes of Ashoka Buildcon, Jindal Stainless, Walk Hard is up 3% again. Third or fourth day on a trot where the stock's seeing some traction. These are some of your bigger gainers. Amongst the losers, Spark is down about 8%. You've got Gayatri Projects down 5%. Then you've got ITD Cementation, which is down about 5%. Infrastructure stocks, some stocks are weak. IRB Infra is down, DB Realty is down 4%. Heidelberg Cement's down about 3.5%. The breadth of the market is more positive. 760 stocks advancing, versus a decline of 410 stocks. Going back to our conversation with Vetri Subramaniam then. Vetri, so what is it that you are closely watching out for now? These factors, well known, they're out there to focus on. But is there anything that the market now will give precedence to?
Well, I think the most crucial thing at this point of time is that we've gone through a pretty prolonged growth slowdown, lasted more than 18 months. We've seen the government sort of, respond to that, I'd say, over the last 6 months with a whole host of policy initiatives. We've also seen now the central bank sort of get in the act a little bit more aggressively in terms of trying to see how it can get more money into the system, how it can stimulate demand. So I think the really key thing to look out for is when some of this really starts into reflecting in incremental positive demand trends. I think the good news is that, over the last year or so, most industries have cut their inventories quite dramatically because it took them a while to realize, but eventually they did cut their inventory. So I think there will be a natural inventory filling process which should give the economy a big leg up. But I'm not seeing anything particularly dramatic in terms of the macro or anything to suggest that one needs to dramatically re-alter portfolios. But honestly, that's been my thought process for a long time, that it's really more about getting the stock picking right than palpitating too much about every new macro news that comes in, because you never know what the macro is going to deliver. I mean, 3 months ago, we didn't know there would be a coronavirus. We didn't even know 3 months ago that, you would get some sort of a deal on, the US and China in terms of trade, and that led to a lot of optimism as well. So I tend to cut that, noise out and focus more on where the companies are.
Any sector then that rings a bell and maybe an outperformer or a backbencher of sorts in the last move that we've seen up until these record highs? Anything that can outperform?
The multiple sectors, but again, just to dwell on that point a little bit more, I think the character of this market going back to almost a decade now has really been that even within a specific sector, you can get stocks which turn out to be massive multi-year outperformers, and in the same sector you can get a stock which turns out to be a complete value destroyer. And I think in that sense, actually obsessively focusing on sector allocations instead of focusing on the stock selection has actually been a drain for those of people like me in this business who are fund managers. Maybe things will change at some point of time, and of course there are times where you do look at a sector either being excessively optimistically valued or pessimistically valued. We do think the whole domestic pharma healthcare space, for an example, is a sector which has seen significant derating over the last few years. Valuations are attractive. Growth so-so, they're still dealing with some challenges, but it's only when a sector is facing those kind of challenges do you get valuations which look attractive. And when we stack up the sectors and look at them, this is one area where at least the valuations now are telling us incrementally there's reason to look at it positively, because these cheaper valuations are actually an opportunity to act on.
Did you think that the RBI, and I mean, you know, a lot of people said that Das has done a Draghi, and it was a very unconventional sort of measures that were introduced as well. Anything that the policy dished out which you think could aid? I mean, we'll only know the proof of the pudding will be in the eating, but since we build a hypothesis, are you building a hypothesis around maybe liquidity coming back in the system in a better fashion than what it is right now, and therefore aiding some pockets, or does it even help to build such hypothesis?
No, I think that's a great question. And, you know, when we look around both in India as well as in other parts of the world, the fact remains is that when you have a central bank which is clearly pumping out liquidity, and when the banks are in a situation where they are flush with liquidity, eventually that money does start to work itself somewhere into the system. Now, if your question is, will you get a capex revival because of cheap money? I think the answer to that is no. But will you see at the margin some kind of consumer uptick? Simply also because of the fact that, remember, there's been a lack of credit availability in the last 18 months, and that shows up in the data. Now, is it weak demand leading to lower credit demand, or is it lower credit availability leading to demand? Is a bit of the story of which came first. But if you look beyond that, I think just the fact that money is being made available on these attractive terms, which means that some lender or the other is going to say, look, when I've got visibility of cheap money, it makes sense for me to take a little bit of a risk. So I think incrementally these policies and the tactics that RBI has used in this credit policy, which is a good reminder of the fact that the only tool with the central bank is not that monetary policy committee rate setting. There are other tools available with the RBI.
And he said that.
Exactly, and I'm glad they've used it. And I think you will find that some of this will have a positive impact. It may show up more, you know, in some of the more interest rate sensitive consumption items, but I think it will show up in due course.
Okay. Now, the other question also is, where are you on the debate of whether the money that is in the hands of the corporates due to the corporate tax cut and now the DDT, will that be used for capex, or will it be used to pay returns back to shareholders either via dividends until now or maybe via buybacks? Because there the street is very starkly divided. There is an equal camp which believes that why would companies do that when there is no demand? There's an equal camp which believes that companies will take some steps anticipating higher demand. Where are you on this debate?
No, I think I'm very clear on that debate. Look, eventually entrepreneurs invest only when they're sort of enthused with animal spirits, and that is not just a function of the cash in their hand or the strength of their balance sheet. It's a question of the demand visibility that they see when they look out the window, and unfortunately that is not something that people have great confidence in. So I don't believe it will lead immediately to capex. You know, maybe they'll hold some of that cash in reserve, but again, let's remember that it's not that there's no capex happening in the economy. It's a $3 trillion economy, 25% investment rate even today.
Marginal, right?
25% investment rate is $750 billion of investments happening every year, which is not insignificant. I think what we are debating is, can we get a qualitative jump up, right? A double-digit growth, let's say, in capex, and significantly higher than nominal GDP growth, whereby it becomes an incremental contributor. On that, with low capacity utilization, as we see in the Obicus data, not going to happen. And, you know, we've heard all this talk about PPP and new ways to revive it, but it hasn't happened in many years now. So I'd be very skeptical. I don't think the entrepreneurs have the appetite, and I don't think the banks have the appetite to lend to those projects anymore.
Okay. I wanted to ask you about, you said that at some point lenders will say that since there is liquidity, I'm going to go and take a risk on lending. Do you see that happening anytime soon? Because, the big NBFCs as well, who've had a very clean track record, have taken a conscious decision to hold back a little bit. Do you think that will change?
I think on the NBFCs, there's still a bit of a trust deficit issue. And I think we've seen several people, go on record saying perhaps you need something like an AQR so that this trust deficit issue in the bond market can get addressed. In the absence of that, I'd still be, a little bit skeptical of how aggressive the NBFCs are willing to get. But I think the RBI's policy announcement of providing liquidity to the banks with a longer term time window will certainly get the banks to get a little bit more aggressive. But on the NBFC side, I think, without something like some sort of a modified AQR, the trust deficit issue is a bigger problem.
Were you also hoping for an Indian TARP type of an announcement from the budget?
That's a hard one. I think there is that risk of how that will A, be perceived politically, and B, does it become a bit of a bailout for people. But I do think when a problem becomes widespread, and this is a little bit of a widespread problem, if you think about what happened when the AQR happened, right? It was followed by the government putting in large amounts of money into banks which had to recognize those losses. And as far as the private sector banks which were exposed were concerned, they either raised capital or they sold assets that they had to recapitalize. I think once you use that as the template, there is no reason to argue that the same cannot be done again for other sectors which are facing challenges. And in a way, when you think about some of the announcements government has made in terms of trying to create a SPV to restart some housing projects, it's sort of the same idea. But done very differently, and therefore it'll just go take a little bit more time as compared to a TARP side approach which sort of addresses the headline issue immediately.
We're seeing formation of new sectors, small ones at that, but back-end manufacturing is now a clear and visible sector out here, even though it may be small for an institutional appetite. Specialty chemicals, and we're just putting out a story about how they are the ones actually at the forefront of the capex, even though that sector is very small, but almost every company is expanding. But why I brought this up is because with the approval that the SBI Cards IPO has gotten yesterday, we'll have one cards company come out with an IPO as well. What do you think about the appetite that some of these IPOs could have in the near term, and any thoughts on this issue as well? I mean, since it's not a listed stock, I thought maybe you'll be a bit open to talk about it.
Well, if you look at the trend over the last few years, whenever there have been sound companies coming with a large capital raising, plan, the market's not been shy of giving them money if it really believed the story, right? I mean, look at some of the large QIPs which have happened from listed companies, new companies which have come to the market. We just had a company come and do a, QIP after having gotten listed just about 2.5 years ago, and market cap is up 10x from listing, and there is still appetite for that. So I think for good, high-quality companies, capital is available. That's not a challenge, and if you bring high-quality IPOs to the market, I think you'll find that there is demand for them. There's no, doubt about that.
Okay, and one last question from mine at least. What is it that you are doing right now? I know you mentioned at the start of the interaction that you're looking bottoms up. We've seen a bit of a return of the broader end of the spectrum starting to perform since November, December, January in particular. Do you think as a fund house, you would look to either open up more schemes, mid-cap, small-cap funds, or maybe park more money if options are available at the broader end as opposed to the top 50?
No, that's a good question, and we run different strategies, and therefore each of them has a slightly different approach. But in some of the strategies where we had the optionality of tailoring how much mid-cap and how much large-cap exposure we wanted, I would say pretty much from late 2018, early 2019, we've been rotating money away from the large caps towards companies which are in the mid-cap and small-cap space. Again, it needs to meet our bottom-up investing criterion, but we've been doing that because after a very long time we actually saw valuations move in our favor, and therefore the risk-reward incrementally was looking quite positive. So in one of the strategies I run, we've gone from being at about 18-19% in mid and small caps 1.5 years ago up to almost 30%. Wow. And in another strategy we moved it from about 25 to about 36%. So yeah, when we see these opportunities where the risk reward starts to shift in our favor, we are happy to move on them. The only caveat that I would put over there is that too many times people look at this valuation as being a timing device. It is not a timing device. Right, so just because it has moved into a discount doesn't mean that it will immediately start performing. But what it tells you is that if you've got that kind of opportunity opening up, risk reward becomes positive, and therefore if you're willing to hold the bet for an extended period of time, you will be able to get the benefit of that. But don't use it as a timing device. I am seeing too many thoughts saying it's gone to a discount, this will be the year of mid and small caps. That's timing, and that's hard to get right. Will it pay off over the next 2 to 3 years? I think it will. But don't use it as a timing device.
Okay, Vetri, just one last question from my side with regards to foreign institutional investors and the confidence that they have in investing in a country like India. Now with China, which has always been attracting a bulk of the investments and the possibility of a slowdown there, is there a remote chance that the allocations and the weightage to India, I don't know about the weightage, but the premium that they give to India changes? Because we're also struggling with our own growth issues, but the building blocks have been put in place for growth. in FY21. So will that be looked upon as a positive indicator? And therefore, what happened in 2014 when the Modi government came into power, where the weightage was 9%, but the foreign investors gave it such a high premium that the markets really rallied. Do you think that kind of sentiment will come back in? Maybe not to that extent, but a little more than what we're seeing now.
So I think the first caveat here, and talking about portfolio foreign investment, is I think the thing we need to be careful about is that whenever we make these statements, we are generalizing, right? You talk to foreign investors and they're cut from very different cloths. Somebody has a growth bias, somebody has a value bias, somebody thinks country allocation, somebody thinks geographic allocation. So I think, we need to be careful about those generalizations, but I would think the Indian secondary market has always been favored hunting ground for a lot of long-term serious money, which is why, in my literally 25, 27 years of investing, basically 3 years where foreigners didn't invest in India. Almost every other year, they've continued to pump money into India. So, if you just looked at those odds, I would say, every year you should expect that foreigners will invest. And even last year, despite all the problems, they were actually pretty big investors in India. So I think that will continue. I think where it's more disappointing is actually on the FDI side. Because if you look at the FDI flows, I know we refer to the nominal number and say, oh, we are still doing very well. But if you compare the FDI to GDP, we are not doing very well. And in fact, quite a few people did a study about 3 to 4 months ago about where have companies who decided to de-risk their supply chain out of China because of the US-China trade tensions, where did they choose to go? Less than 5% of the companies chose India. Most of them chose other destinations. So I think it's the FDI side where I still worry that we still haven't got our act together in terms of inviting foreign money into FDI. But on the secondary market side, I think just the kind of high quality franchises we have, a good regulatory system, good governance with companies, will continue to remain a magnet for foreign investors.
All right, and we hope so too. Thanks, Vetri, for joining us. Really
Thank you so much.
appreciate it.
Thank you.
And see you more often in our studio.
Yeah.
Thank you.
All right, we're going to slip into a very short break. The markets are holding strong, actually. We're at 12,209 now, so that's getting the top on the index in early morning trade. Coming up next, we discuss the earnings with V.S. Parthasarathy of Mahindra & Mahindra and R. Sri Krishna of Hexaware Technologies.